Well, welcome to the December 2023 Phoenix Metro Area Real Estate Market Update. Well, let's start with home price appreciation, which is not the same as home prices. Now, we hear a lot about prices going up or down, and that always depends on the start point for the comparison. Are prices up from last month, from last year, from 5 years ago? What is helpful to understand is are prices appreciating or depreciating on an annual basis? So those numbers nationally by state and in your local neighborhood, they're going to vary. So let's take a look at the projections for 2023. We are in the last month, so we don't have all the data, but they're projecting an average of about 4.6% appreciation this year over last year. Fannie Mae is at the high end at 6.7%, and the National Association of Realtors is on the low end at 0.1%. If we jump to projections for 2024 nationally, Realtor.com and Zillow think that there will be depreciation of 1.7 and 0.2%. Mortgage Bankers Association thinks that we'll see 4% appreciation. The middle is just under 3%, and Goldman Sachs, one of the major banks, projects 1.9%. The average of all of these together, that's the blue column on the left, is 1.5% appreciation year over year. Now, average yearly appreciation over the last 40 years was 4.92%. So 1.5% is definitely lower than the 40-year average. And coming off what we call the unicorn years, 20% annual appreciation. Seeing this slowdown in appreciation is very good news for affordability. Because of the affordability crisis that we currently face, we need home price appreciation to slow down, which is occurring. And importantly, we need mortgage rates to moderate even further. The shortage of available homes has been a significant driver in appreciation. Prior to 2019, the average supply of available homes was between 4 and 5 months supply. And during the unicorn years of 2020, 2021, and 2022, it was between 2 months and 2 weeks. Now, those levels did increase and are returning to a more stable 2 to 3 month supply. Sellers are more likely to put their home on the market when they're comfortable that they know where they're going to go to next. The drastic inventory shortage kept sellers from selling, so some good news for buyers on that front as well. Well, mortgage rates have been extremely volatile and have certainly contributed to the slowdown in purchases. From July of 2023, there was a slight uptick and then a larger increase into September, where the daily numbers got as high as 8%. And since then, rates have progressed down to about 7.22%. So what's in store for rates in 2024? Well, right now we're seeing 6 straight weeks of rates dropping. As of December 12th, the time of this recording, rates are around 7%. In some cases, some of our clients have gotten below 7%. Many forecasters are calling for rates in the low sixes sometime in 2024. Now, what does that mean? If that happens, well, it's going to be a very, very active market because 2 things will happen. More inventory will come to the market, which is needed desperately. And the second thing that will happen is buyers, more and more buyers will be eligible to purchase a home. And lastly, a look at the buyer demand data shows that demand is actually up over the pre-pandemic or the unicorn years. So the years of 2016, 17, 18, and 19. There are more people out there looking at houses. Now, the numbers could be a bit skewed because there's such a lack of inventory that there might be one person looking at 3 houses where before they might have only looked at 1 house. But there are people out there looking to purchase a home. That demand has continued and appears that it's higher than it was prior to the pandemic years, or what we call the unicorn years. As a matter of fact, Zillow's latest market report says, despite mortgage rates reaching a 23-year high, low inventory levels are spurring surprisingly strong competition. Depleted inventory stocks are gradually recovering and price appreciation is slowing. But demand has remained resilient and attractive. Appropriately priced listings are moving quickly. Well, we'll see what 2024 brings, and we'll share that data in our January 2024 update.